Inflation, interest rates, and oil prices are the key pressures on the markets right now. And history shows that high inflationary periods have share markets hitting lows as the oil prices top out, which looks to be about a month away. Plus, we're also looking at the best trading shares this week. Gary, that's one heck of a report you've written this week, and I'm looking forward to getting into it as we're setting up for more RBA rate hikes, possibly today and in the months ahead. How's it been writing this report for this week?
Yeah, no, it's all you've almost stole my thunder there, Chris, actually, with all that. You've placed
almost.
me.
I took it right from you.
You've nailed it there, really. I mean, there's some interesting charts here covered this week, just sort of which kind of highlight that. So there's sort of things for us to be watching, because they should be sort of occurring at the same time as, so yeah, no, so you're right onto it, 100%.
Well, I did read your report, so that gave me the heads up, and it's good to get that report. For those who do get it, it's Mondays, and we cover it obviously on Tuesdays. Now, inflation, that's the word that's quite interesting. I've noticed that it's flowed through all the way to mainstream media. We've been talking about it, you've been covering it, and the financial press has been covering it for some time. But when we look at inflation from the markets front, or the front of the markets, we can see that it's bitten hard in the US. We know they've had 7s and 8s, and they've really been sort of trying to get a handle on that. But when we look at it on the market side, we know it's hit the NASDAQ probably the hardest, with inflation, interest rates really bringing that market down. Is this a mild rally that we've seen from the NASDAQ, and maybe they can hold on to these gains, or are they just looking to etch out another low sometime soon?
Yeah, no, look, it is a mild rally so far. And look, if you can't see it on the chart here, but if you look under the hood, if you go and actually look at the volumes that are getting traded on the up days versus the volume that's getting traded on the down days, there's a significant difference as well. So we're just not seeing any, what Neil calls these follow-through days, where you sort of big up day on volume stuff there. So I know a few guys are sort of talking about, there's been a follow-through day a couple of times there and they haven't gone through. But if you actually look at the volume, you're seeing that really that, the days going up are really light volume. And even to the point there we actually get what they call like a wide range day. So, if you trade a small range, then you're not really going through too many bid and offers. Whereas if you do a big wide range day, then basically there should be, you should be going through quite a lot of buys and sell lines there. So the volume should be higher there. So we're just seeing quite a few wide range up days. So where the volume should be at least average or above, and the volume's actually below average or quite low. So just sort of shows not a lot of selling, not a lot of sellers in a way here. But then once you hit a bit of a level, then all of a sudden the selling steps in, and then a couple of down days after we've seen some rallies are significantly higher as well. So seeing the same thing on the XJO, if you really sort of if you can, sometimes for some of the whichever data provider you get, it's a bit of a mix there and stuff there. So I look across a number of sources there, and you also, like in the US, the aftermarket data will come out the following day as well. So you sort of got to look twice at it. But looking through all those indices, they're all got the sort of same characteristics. We're just going up on very light volumes. There's not a lot of conviction in this buying here. And so that's a negative for me. The structure of this trend at the moment is the other negative as well. So I've sort of got highlighted a couple of green lines there and basically the spacing there. So what that means is sort of as you sort of break to a new low or take out the previous sort of swing low, eventually you'll bounce back. Okay. Sometimes you bounce back, towards the high or back into the range there. That's what they call like a corrective trend. But if you bounce back and you fall short of the previous swing low, then that's called basically spacing there. That's sort of like bearish spacing. You just sort of highlight that, the top one there. That's the one there. That was our first time we got bearish spacing there. So that leaves a trend vulnerable to go to a new low. So normally when you start trending down, and you leave spacing, you go to a new low here. So this current bounce here, we've had 2 or 3 weeks up here, and we haven't gotten too far. Volumes have been pretty light. We're well underneath the previous swing low, And so if we don't go too much higher here, we're going to leave spacing again. So if we leave spacing, if we turn back down here soon, then we're vulnerable for lower levels. So, whichever way I look at this chart here, obviously we're heading down here now. The trend is down. We've overbalanced. Volume's weak on the rallies, and we're starting to get spacing occurring in our trends here. Just the rallies are pretty weak here. So there's not too much to like really on the upside. I know some people are saying we're going to get a bounce here, but everything technically tells me this market's really weak here. So until we go above that sort of swing high there, I think it's what 12,800 or something on the Dow. On the NASDAQ there. This still remains in a very weak position.
So the spacing, it's great that you've explained that there, those gaps in between the lows of sort of one movement and then the highs after it edges out a new low.
The best way to think of that, Chris, is like, if we got a strong trend, it's like a staircase. It just sort of builds on top of each other. So you can see there, actually, see there at 14,000 on the way up. See how basically the market, it broke that level. Then it came back and actually found support on that high, and then went again. Okay, so that's that's sort of like a normal sort of typical bull trend, and then you get spacing, and that's when it takes off. So and sometimes you get really weak trends where they're just overlapping. Start basically sort of start overlapping there. We can saw there at the top there, after it actually broke down, it actually broke below the previous swing high there around that 15,500. Once it broke below that old high there, then that's actually a sign of weakness, actually not sitting on top of the previous trend, particularly when you're in such a late stage move here. So, just at this stage, we're in a weak position here. The NASDAQ is going to have to close above 12.8 to get into a strong position here. But at the moment, it's in a very weak position now. I can't see anything but weakness there.
So that's a good thing to understand. They're the levels that you're looking for. They're the kind of points that you're looking for breakout to show that the character of the trend has changed. But right now, it's building, the spacing's growing on the way down. It's already hit your target, which was in this period sort of earlier. It's just touched it and then come back up. So you're still looking for sort of that 10,000 area, is that next port of call, which is the old high?
That's right. Yeah, that makes the most amount of sense to me, is to come back to retest the old high. We're already seeing quite a few stocks already do this. We've already come back to those old highs there. Just can't rule out, just because this is the third accelerating trend line, can't rule out something a bit deeper here as well. So sounds a bit scary, that sort of 7,500, but can't rule it out here yet. Just in terms of what's going on here. But yeah, I still think 10,000 is my sort of that's my preferred target here at the moment.
Okay, well that's the level, and that's a good explanation of the NASDAQ. We'll move on through to the S&P 500. Now, you've also in that market, or that indices, you've hit the first downside target that you looked at, and then it's bounced a little. Are we still angling for that 3,400 level as the next target?
Yeah, so similar there. Obviously, we've sort of probably got less weakness there and less steep is the S&P 500, which we sort of probably, I think we alluded to that, historically, the NASDAQ is the weakest one, and then the S&P 500, and then Dow Jones, obviously the less weakest of the US indices. So, and just looking at the angle of descent, we're coming off in a more mild manner here. But the reality is here, again, we've still got the same characteristics as well. We're sort of bouncing on very light volume. When we're sort of getting up to a bit of a level here, we're seeing a little bit of selling here, and that volume starting to pick up. And so far, we're sitting underneath that previous swing low. So that 4,200 level is a pretty important zone there. So price is going to have to close above there on a weekly to sort of negate that. So now the market looks a little bit oversold there, sort of trying to bounce. Maybe it'll try a bit, but yeah, that's still a bit of a key zone there for me, is to watch that. So yeah, I mean, if it fails around here, around that 4,200, and it starts to turn down here, that'll be pretty bearish. That's just sort of a sign of weakness, and normally means we're going to trade to a new low if it does do that.
Okay, so failing to get that 4,200, we're looking to take out these lows from a couple of weeks ago and end right back up in that target area that you'd highlighted, well, months ago.
Yeah, that's my
So
preferred target, is to come back and retest that old high there around 3,400. So might even just slightly overshoot it, just to you know. But yeah, I think that's the level we're looking at there.
right. Well, as you've mentioned, and you've said for a long time now, the Australian market looks to fare better than the US indices. We have more value companies. The commodities are running hot. They're helping buoy the economy. We have decent dividends. All of those aspects for a higher value market, a bit like you said a moment ago with the Dow Jones. Now, given that, your XJO predictions have been pretty much bang on, replicating that 2000, 2002 bear market. But we notice this week you've added to the chart the ABC. Can you walk us through what that ABC is, how you got it, and
Yeah,
what it means?
yeah. So like normally in a normal trend there, if you just get like a little three-wave pullback, this classics ABC, that's sort of that's just a sort of classic corrective pattern, and that's the most common pattern. So if you're looking to buy an uptrend there, if you get a little three-wave pullback, that's oftentimes the safest place to sort of come in and look to get longer stuff again. But also on the weekly, we can get these sort of setups here. But we know this is, if we go back to that 2002 period, we know that we refer to that period there, that our index held up so much stronger, but it still had these sort of broadening pattern there where it would actually go to marginal new highs, marginal new lows there, but it was sort of more of a big sideways sort of corrective pattern. So I just think we're likely to sort of go back and retest that low there around 6,700 here. Even this rally here we've seen this rally here so far. It's very corrective, so it's overlapping. So see how we've gone up, down, up, down, up, down within the trend there. Yeah, so it's sort of like those three little spikes there. It's just an overlapping trend there. So it's not a strong trend. So they're often referred to as maybe, it's not the ideal situation there, but sometimes there's little sort of pennant flags there. This is a little larger than that, but it's just still not a strong sort of setup here. So it just leaves us vulnerable for another leg down. And again, you just go and, if you can get access to an XJO chart, look at the daily chart there. Just go and have a look at the up days versus the down days, and look at the difference in the volume. I mean, some of the volume spikes on the down days are so much bigger, like 2 or 3 of the biggest down days there. And the thing you're seeing there, again with the XJO, some of the big days up, we're actually getting wide range up days. The volume's so light, so again, if you've got a small range where you don't do too much of the day, just sort of stay in a tight range and nothing happens, and then that can be a low volume day. But if you're sort of, if the index is up 60, 70 points there, and the volume's lighter, half the average volume, that's just not a good sign. It's not a healthy sign. So
it's almost as if the sellers didn't show up that day. So if they had a portfolio to sell down, they just went to the beach.
Liquidity issues, not too much in the market there. But I mean, so what you'll see is that the sellers are all sort of you're almost waiting to reload. So you just want to, you don't want to sell down lower, so you'll sit back. But there's not that many buyers there. There's just not the sellers just sort of waiting for hopefully prices to go higher there. But we've seen that if you look and drill into some of those daily charts, there you'll see that in the volumes as well. So it's just it's just interesting so far. Just again, I just can't see too much signs of strength there again. And even things like the financials there have had a bit of a bounce, and then they've sort of gone up in a bit of a pennant flag formation as well, and they're starting to break down as well. So they don't look particularly strong here, the financials, to me. So that's one sector I thought was pretty weak on the weekend. So yeah, I just saw definitely elements of weakness across the market there. Really only sort of commodities that are sort of showing some strength there.
Well, the elements of weakness across the market is definitely what we've seen. You've highlighted a few shares this week, ones that you've added to the portfolio. We start off with their New Zealand AIZ's ticker. Now, this company, they've got massive backing, or have had massive backing from the New Zealand government. And you've looked at the capital raise, how that's pushed the share price around, and then you've done the hard part of crunching the numbers. So what does that all come out for a net effect on AIZ, I should say?
Oh, look, I just think this, from a fundamental perspective, it looks super cheap here. So we've got, if we look at 2017, 2018, 2019, just look at what the average market cap was for the year. It was sort of, from 2.9 to say 3.5 billion. So just to say like a 3.2, 3.3 average for those 3 years. That's before COVID. So with this rights issue, with it's a big rights issue. That's probably the issue here. It's like 2 for 1. It's a big bonus issue there. Only 88% got taken up there, so there was a shortage there. So I had to go to a book build to get the rest. So it's just caused a bit of a weakness there. The one thing you find here with these rights issues is 2 things: is that the market gets wind that they're coming, so then they weaken off, and then when they occur, if they're large, what that means is that everyone's now got to apply for twice as many shares. Like you've got to apply for twice as many shares than you've already got. So there'll be a reasonable amount of people who don't want to hold that many more shares. So they might basically sell some of their existing shares and then take up the new ones. So it just puts the pressure there. You see that often historically you see these big rights issues, particularly the big ones there. We saw it with Webjet and Flight Centre, Qantas. They did all this in April 2020 there, but really compressed the price there. But in that case there, I think they traded lower for maybe a week or a week and a half before they started to recover. But this one's probably gone a bit longer here. I think it's probably to do with the shortage there. I say, like, for some reason, only 88% of shareholders took up the rights issue, which is kind of crazy because when you're trading at 80 cents and are offering them at 49 and you don't take them up, that's crazy. It's either
leaving money on the table.
Yeah, you're either got, there might have been some element there of overseas funds not being able to participate in that, but my guess is probably half of that at least is just ignorance, just people not having a good advisor, not getting good advice, and leaving money on the table there. So you could have sold those shares at 80 and took them up at 49. But what it has done is really compressed the price here. It's just, this is stock's on its knees here. So I just think you look at, again, technically it's not the greatest sort of looking chart here. Obviously we've come off pretty hard. Do have a little descending wedge there, sort of starting to come out of it. Probably the most interesting thing is the volume is lightening up here. So it's really starting to shrink here. So that's sort of showing us that our selling's starting to dry up here. So that's the most interesting thing technically. But the valuation wise is just, is pretty big margin of sort of so if you think, okay, the Air New Zealand can get back to sort of normalized levels, maybe 12-18 months from now, then potentially you're looking at a sort of 40-50% swing up at least here, Chris. So there's a fair amount of upside in this move here. So I think this one's outstanding here. I just it's sort of, I keep thinking maybe there's something here I don't know, but so far, yeah. I mean, the reality is here, I think New Zealand's a bit like WA. They're just behind the curve and that COVID curve a lot. Yeah, they've really only been out of lockdowns here for about 7 or 8 weeks, so they're just a little sort of further behind than we are here in Oz, or most of Oz. And in terms of, so I think, we're already starting to see, in Sydney and Melbourne, travel, we're already traveling pretty large here. I think Qantas is back to roughly 80%, of its pre-COVID sort of numbers there. So even though they seem to be cancelling flights, Qantas. So, but yeah, I think the other airlines are pretty busy here as well. But yeah, I think it looks. I just think that you'll see a recovery in that sector there. So this looks like a good long-term play to me.
Okay, so AIZ, there's a good fundamental breakdown there of the post-rights issue.
Yeah, look, I could be wrong here. I mean, look, maybe there's something else going on here why the price is lower here, but to me, it just seems like an outstanding opportunity. If we go back and look at, go back and look at One Steel, Blue Scope when they did their massive rights issues, go back and look at the other airlines. It's just those type of events, they just have a, 98, 99 times out of 100, those type of events, they cause the price to really compress and to go a lot deeper. So, yeah, so I think it's a great opportunity here with this one.
Well, that's definitely a good one to keep watching, and no doubt you're on top of that. The Adairs one's one that you mentioned last week, and the specialty retailer, you looked at the Fibonacci levels. So where are we now trading on those Fib levels?
Yeah, so come back a fairly large correction there on the weekly, pretty deep here. Just again, when I look at the numbers, we're about 7.8 times 22 earnings. So even if it's sort of And those 22 earnings are actually forecast to drop off quite considerably from last year, and then bounce back in 23. So around about 6.2 times 23 earnings there. So I think it's sort of pricing in a lot of the, supply issues, and just, I think maybe too much here. But yeah, I'm probably just going to start with a little starting position here, start small, and then if it starts to build here, then I'll add to it. If it goes a bit lower here, then I'll use a stop there and cut it as well. But I just think this looks pretty strong value here. Looks like the sector's overdone there, and I think it can bounce from here.
That's a good one to look for Adairs. You also mentioned last week ING, so Inghams Group. We all know the chicken. We've probably all eaten it. What's happening there? It seems like it's just unable to get under that 280 and stay there. Is the market sort of buying it up, or what's happening?
Yeah, so I just sort of, I was looking for that little false break there on the weekly there from that October low, but just looking out previously to the past October as well. Just noticed big sort of broadening pattern there. So that sort of has matched up pretty well as well. So I just think it's a pretty good level here. Saw some okay volume come in off the low there, and just sort of starting to build here now. So I just sort of think there's signs. I know that these businesses obviously their costs have gone up here. It's obviously feed costs, but it is a business that can pass that cost on. I mean, with all the food shortages around the world at the moment here, I'm sure they can pass that on there. So
iceberg lettuce going for $12. I think we can pay an extra dollar for a chicken, can't we?
That's right. Yeah. So I just think it looks quite good here. So again, I'm sort of out of the small holding. I might look to build it if I start to sort of see a bit more positivity there.
Okay, so that's one that's feeling the inflationary pressures. It's showing in the share price, but it does look like they can push it through. If we go to the other end of the equation, so in the East Coast, we're hearing lots of problems about the gas prices. Australia's recently come onto the international gas market in the last decade or so, and that's suddenly become a concern for production. Now, we're hearing reports that new industrial factories are being told not to set up because they can't get the supply of gas and energy. So that's in New South Wales. One who can benefit from that, and the share price alludes to benefiting from these higher gas and oil prices, is Santos. So how do you dissect the chart for Santos in this current climate of epic oil and gas prices?
So we know, Chris, obviously with, we cover these momentum stocks sort of every week as well on the Friday there. And so we know the energy sector is obviously one of the strongest sort of sectors there. So obviously coal has been, leading area. And then recently, obviously, energy, all stocks have been pretty robust as well. So we can see here that, Santos has stayed pretty firm here. And we've seen this really tight price action now. So I thought it was a little bit of an ascending triangle there, sort of setting up around 840, as 840 is the lid there. And then, and then we've sort of got a little sequence in there. So there is a bit of a ascending triangle in there, but I was looking at the bigger picture there. We do have this sort of ending, what they call this diagonal triangle. And this is how like a lot of major tops come in there. We can see there previously, that previous high did exactly that into 2019. So they do, sometimes they can pop out the top, and then once they pop out the top, then that's a sort of sign you're sort of very late stage here. So just a lot of ending. There's a lot of ending diagonals after really strong moves. So it's just an interesting pattern here. Just looking at it here, we've got the same sort of setup here. So it looks, this looks sort of short-term bullish here. Can pop through the top here. But I think this is getting late stage here. So it could end with a bang like it did the previous one. So I expect to sort of see this to maybe pop up here. So maybe it goes up to 950, who knows? Maybe it can do something a little out of the box. But, maybe something up around $9 there would probably up around that sort of high band there. But I do expect it to sort of pop a bit more. It's obviously been that sector's been pretty robust there. And as we sort of discussed there, and as you mentioned at the start there, is that the one thing that sort of history has told us is that markets find, these high inflationary periods, markets find the lows as inflation finds its peak. So we need to see inflation peaking. So everyone's sort of saying they're already preempting it now. Inflation's peaking, it's going to come off. Well, mate, if the oil price is still going up here, the energy price is still going up, it's not going to come off just yet. So we need this energy is energy costs, fuel costs. That's a big component there. So the supply chain issues, they'll take a few months to sort of sort themselves out. So I really think here this oil price is really the key. So watching oil, I think once oil peaks and then starts to turn down, that should be coinciding with the low in the market. So if we're a month away or maybe a bit longer on the downside for the equities market, that still looks pretty weak. We might be a month away from the top in all stocks as well. So just think this is really interesting here because it just sort of that setup is still pretty bullish and still holding up pretty high, but it is late stage. So, but they can end with a bang like they do historically. But this, I think watching these oil stocks here for the next sort of 2 to 4 weeks will be really important. I mean, I talked about some of our relationships with like AGL and Origin. Those utilities, they typically find lows as the growth stocks find their highs. So no coincidence that what was it, NOV 21, when AGL found a low and when the NASDAQ found a high, because that history's told us that that's happening in the past over and over again. So it's the same thing here. So history is telling us here that these oil stocks are going to peak here. Inflation is going to peak at the same time market finds a low here. So I think this is really, the relationship we got to watch here.
So, well, that's almost the canary in the coal mine for the rest of the market, isn't it? But in a positive way, once we see, like you're saying, those oil prices come off, the gas prices, the energy concerns that we have internationally, once that comes off, then we start seeing the bottoms trawl out of the markets. And
if you look at all those oil stocks, look at, Woodside, Beach and all, Santos here, they don't look like they've peaked yet. They're actually getting some momentum here. They're getting ready to pop higher here. So I know it's late stage, but they're not showing weakness here yet. They're actually still amazingly still pretty robust. I mean, we've seen it with coal. Coal looks pretty like it's run, but it's just kept going. So there's no weakness in these charts here yet for oil stocks. So they look like they can pop higher here. And that for me, that means equity market's going to go lower. But yeah, we're looking for these oil stocks to sort of peak here, hopefully in the next month. And that should coincide maybe with a market low.
Well, if we look at something that has been trawling out a bit of a base, it's one that we've picked up a few times in sort of the launch pad and those when we're servicing the base builders on a weekly basis. And SSM is one that's sort of been in those lower ranks for a little while, but is it trawling out a base and maybe ready for a run, or what are you picking up on this SSM chart?
Yeah, like I just, the stock's just showing a bit of relative strength here, Chris. So it's, so we've basically sort of got our low here, September there. And we've sort of, had a bit of a bounce, grind all the way back down, didn't go to a new low. So basically really struggled to get to a new low there. And then we've had a bit of a pop there. And that rally actually, not bad volume there. The volume early in that move was actually pretty decent. And the volume at the low was pretty decent as well. So it's sort of starting to build here. So now we've sort of got a second high low. And again, we've sort of seen some reasonable volume on those sort of off the lows as well. So sort of starting to build here, this one. So it might be early stage here, but I'm sort of really looking to sort of try and build a bit of a watch list of stocks that I think are showing relative strength. A bit like the I think we sort of highlighted Polynovo, and I think it was, what was the other one? Sort of Ordinate as well, sort of showing a bit of relative strength. So just a few stocks here should be sort of starting to hold up here. So probably not going to burst up here. They're probably just going to be building here. But those stocks that can sort of show some relative strength here while the rest of the market's going to new lows, those are the stocks we want to be buying when the market is at new lows, because they're the ones that people are already starting to accumulate, because I think these ones are the strongest, and they're the ones that typically come out of the bear markets the strongest as well, with the biggest moves. So don't be trying to buy the stocks that have V-shaped lows. Look for the stocks that are looking the strongest there, because history tells us that those are the ones that perform the best out of bear markets.
Right. So if we're seeing the oil prices peak, the gas prices peak, the markets start to trawl out a bit of a bottom, you're not going to be buying the pullbacks in the energy companies you've just listed. You'll be looking at these service streams and the companies that you've highlighted as good relative strength. They'll be the first ports of call.
Oh yeah, I'll be trying to convince all my clients just to dump all the energy stocks I've got, and I might even look at a short there personally, because that's I think maybe this sort of this third quarter here or something, that could be a reasonable correction there. I think it's September through to December historically is that's the seasonal weak spot for all stocks as well. So, but yeah, maybe we can get a little higher there into a July or something. Maybe distribute for a month or two and then get crunched after that. But it's just that's sort of the way it sort of normally sort of sets up here. So, but yeah, it's interesting. Everything seems to be sort of aligned here. We're just gonna trade wise, keep your stops in place, and just be smart here. I think it's if you can go the next month or so without losing too much money, I think that's probably the key. And then there should be opportunities everywhere after that.
Very good. Well, we'll keep looking for these relative strength, these ones to put on the watch list and service when the market turns. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.